Hello and welcome to today's panel discussion on how businesses can kickstart their IPO journey. I'm Akin Daily, Business Insider's Deputy Editor of Investing, and I'll be moderating the panel. Thanks to Fidelity for producing this event in coordination with Business Insider. I don't post much on Facebook these days, but back in 2012 I used to. That same year, Mark Zuckerberg was courting investors to take his social network public. It was seeking to raise $5 billion, which at the time made it one of the largest IPOs in tech and internet history. Some analysts couldn't take Zuckerberg seriously because he wore a hoodie. But now, Facebook, or Meta, is worth more than $1 trillion. Zuckerberg's a billionaire, and he doesn't need to wear a suit to be taken seriously. An initial public offering is one of the most significant milestones in the life of any company. It's a sign that a business model has proven itself, that it's found loyal customers, and that it's ready to be turbocharged by millions or billions of dollars from the public. It's also an opportunity for the earliest investors and employees who took the biggest risks to cash out. But the road to getting there is chock full of twists and turns. Even just determining the timing alone can be the biggest hurdle. And as you may know, there's some softness in the IPO market right now, with companies like StubHub and WeRide postponing their roadshows. Companies that are considering IPOs face uncertainty due to market volatility and key upcoming events like the presidential election. Many companies that went public in the last 2.5 years are now trading below their IPO prices. But a few have prevailed, like Reddit, which made its successful public debut in March. So what can companies do to effectively take the leap from the private to the public markets? How do they decide it's the right decision or the right time? What should you consider when preparing for a roadshow, picking the right investment banks, and staying on the SEC's good side along the way? Today, we'll hear from Jesse Rose, who's Reddit's head of investor relations, Kristen Croft, Fidelity Private Shares' vice president and business partner manager, Ash Spiegelberg, a partner at the technology, media, and telecoms global lead at Brunswick Group, Elizabeth Reed, Goldman Sachs' global head of equity syndicate, and Rick Klein, a partner at the law firm Latham & Watkins. I am honored to have you all here today. And we'll start off with a lightning round question. And it's a lightning round, so I'll ask each of you to keep your answers to under 1 minute, please. And the question is, what's something that would surprise founders about the IPO process that they're probably not thinking about right now? I'll start with Jesse from Reddit.
Great, thanks. And thanks for having me here. It's an honor to be here as well. So to keep it quick, coming from the IR person here on the panel, I'd have to say mock earnings calls. I think the importance of mock earnings calls are probably underappreciated. And what they do is they help you get into a public company rhythm, and there's a lot of important learnings that can come from that. So when I say rhythm, I'm thinking of it'll help you prepare to close the books on time. It'll help you think about forecasting the business with accuracy. It'll also help you think about, what your board meeting and internal business review meeting cadence looks like and how that is going to kind of translate into the public company world and cadence. And then on learnings, strategic narratives, it helps you identify weak points. You get to practice Q&A, and all these things are really helpful for investor meetings and the roadshow that are coming up shortly after that. So that's where I'll leave it. Mock earnings calls would be my one.
Great. And Kristen, what's your take on what's something that might surprise founders about the process that they're not thinking about right now?
Great question. One thing that people are often surprised by is how far in advance they really should be thinking about and preparing for IPO. So generally speaking, we love to work with folks who are 24 or even 36 months pre-IPO. And the reason we advise folks to start so early is because oftentimes they need to start thinking then about what they're going to do to retain their best employees, their best team members, their board. And therefore, a lot of research needs to be conducted on peer companies, for example, and how those peer companies, many of whom should be publicly traded companies, if you are benchmarking, what they are doing when it comes to compensation, both in terms of cash comp and equity. So really having that 24 to 36 month lead time in advance lets you work with entities like Fidelity who can advise on compensation strategy and a host of other priorities that really need to be on your radar well in advance of an IPO.
Great. Ash, over to you.
So I think that the great to be here and quick thoughts on this. I mean, I think the real thing that people need to be thinking about is just how multi-stakeholder these transactions have become. If you look 10, 15 years ago, they were very much kind of financial transactions and people were much more focused on investors. Now the number of constituents, the number of audiences has just grown exponentially, from investors, customers, employees, media, technology influencers, government regulators, the list kind of goes on. And what you tend to find nowadays, the more high profile the company, the more high profile the issues are as you embark on the roadshow. So luckily in the Reddit case, there weren't that many, or there weren't any really. But if you look at other big high profile deals like Uber, for example, there was a workers' strike, Coupang, there were some tragic deaths. Issues tend to arise, and being prepared and understanding how all these stakeholders weave together is really important.
Awesome. And Lizzie?
It's a great question, and I'll take it from the perspective of an underwriter and really interactions with the buy-side community. I think the one thing that I'm going to tease you a little bit because your opening line was that the IPO market is a bit soft. But I'm going to give everyone on the Zoom a little bit of a statistic. If you look at global IPO issuance year over year, it's up about 60%. And if you look at U.S. listed issuance, its IPO issuance is up about 150% year over year. And so I think from my seat, thinking about how do you set up a company for a successful IPO, it's really about making sure that the stakeholders within the company, meaning the C-suite, the board, the employees that are in the decision-making roles, are all aligned in what is the objective of what you want to achieve. And is it the right time for the company to go public?
Great. And we'll dig into those numbers a little later. But Rick, what's your answer to something that might surprise founders right now?
Yeah, absolutely. So love the answers that the other panelists gave. I think, great insights there. The one that I'll add is while IPOs are fairly consistent IPO to IPO, you can tailor your IPO to fit your company culture, your business needs. And I think the way to do it is to really prepare, as Kristen was saying, well ahead of time and think about what you're trying to get out of the IPO. It's a fundraise, it's a marketing event. It's really important for your customers, for your employees, and sit down with the working group ahead of the org meeting and talk about what your key priorities are and how you may want to tailor your IPO to fit that. And Jesse and the Reddit team did an amazing job of that, of really making it Reddit's IPO, which was different than other prior IPOs. And that's a great path for companies to go down.
Thanks, Rick, and everyone for those amazing insights. And that's a perfect segue to the next part of this, which is I'd like to just dwell on Jesse for a bit because Jesse from Reddit sort of represents a real world success story in the room that's recent and that I'm sure will have a lot of actionable insights for everyone. So Jesse, can you take us inside the room as Reddit is thinking about and planning its IPO? Yes, a successful IPO is a combo of good timing and good luck. And luck may be out of a company's control, but timing isn't. So talk about some of the ways that Reddit considered and did get the timing of its IPO right.
Yeah, no, I think it's a great place to start. So at the high level, I mean, IPOs are a journey and they take a village, as others have said. So they're highly cross-functional. There are a lot of work streams. And these work streams involve, of course, folks internally at Reddit and then externally with advisors. And Reddit was fortunate to have a great group of advisors that we started with several years before we even eventually went public. We actually intended to go public about 2 years before we actually did. The market at that point in time wasn't quite ready. It wasn't exactly receptive. And so the world turned a little bit. But that 2 years of sort of a pause or a wait was one of the best things that actually happened to Reddit. It gave us a chance to really think about to practice being a public company without actually being one, and it really helped us improve and think about our business processes and our different functions. So we started operating like a public company during that 2 year period, And we did a number of things like, for example, 8 mock earnings calls during that time period. We've really closed the books in 5 or 6 days. We started forecasting the business with a lot of accuracy. And that was unique for Reddit, and I think we were better for that. Reddit came out of that 2-year wait a better and much more mature company. But some things that I think folks should think about at the onset of an IPO process is think about your stakeholders, right? And at Reddit, this involved our employees, our users in our community, our customers, which are our advertising partners, and our investors, our current shareholders. And you wanted to step back and think, okay, how does the IPO, how is it going to impact each of those stakeholders? How are each of them going to be involved in the IPO process? And how are we going to want to involve some of them? And so with any IPO, there's some tactical work streams, of course. A lot of that is sort of kind of governed and and executed around the SEC and legal requirements, and your advisors can certainly help you with that, and they did in our case with Reddit. But what I think is really special about an IPO too is the strategy that's involved and the creativity that can come into play as well. And so what I mean there is, and relating this back to Reddit, is how we were thinking about involving our community in the IPO process, how we involved our users, and allowing them to invest in the IPO process through a directed share program, and how we were going to sort of articulate our story to the public in things like investor presentations, in our S1, and how that all relates back to sort of our IPO objectives. And those are some things I think on the strategic and creative side that you have a lot of flexibility to do, and I can unpack more of that as well, how it relates to Reddit, if that's interesting.
Yes, sure. You can go ahead and some of the things like you said that made Reddit's IPO very Redditized, if I can call it that. What were some of those things?
Yeah, so I think a few of them were, well, one, Reddit's very much a value-based company, and so when we were thinking about our stakeholders, our employees, for example, to start there, I mean, going public was an important moment for our employees, no doubt. So we were thinking about employee liquidity, what that means, and of course, there's usually a lockup that's related that comes with an IPO process, and we were thinking about how our employees were going to be able to get some liquidity in the IPO event. Um, so what we ended up doing is we allowed them, our employees, gave them the option to participate in the IPO to sell as part of the secondary component of the IPO process. So that was a unique part for us and not necessarily something every company does. But then on our user and our community side, I think, and particularly our retail investors, it was very important for us to sort of involve them in the process and to be as transparent as possible. And so a few things that we did there. One, we allowed our users and folks in our communities to buy shares at the IPO price. So they were allowed to buy shares at $34, and this was done through a directed share program where we allocated about 8% of our IPO size and shares to this directed share program. Um, and we also, in order to sort of maintain that transparency and to level the playing field with our community and our users, and to give them similar access to our management team as other sort of larger, more traditional institutional investors would have on a roadshow, for example, our management team did a video AMA, which is a very Reddit specific feature and product. It's an Ask Me Anything. And our Steve, Jen, and Drew, our CEO and co-founder, our COO and CFO Drew, they did a video AMA during the roadshow, and they were really speaking to our community. They were answering questions that our community raised and posted in a specific investor relations subreddit that we stood up, r/RDDT. And we're maintaining that sort of cadence now as a public company where we keep the r/RDDT subreddit up to date throughout our earnings processes, and then also take questions from our community in that subreddit right before our earnings call, and then Steve and the management team answers those questions on the call. So it was very important for us to involve our community and our users in the IPO and also in our public company journey. Now that we're beyond that, and even something else that I think is unique, and this was probably seen by a lot of folks kind of during our IPO in March. but we had our mascot ring the bell at the New York Stock Exchange. And this was, I think, pretty unique. The stock exchange said that this is one of few times they may have ever seen that happen. But instead of having just one of our or a few of our executives up there ringing the bell, Snoo, our mascot, rang the bell. And he really represents, or Snoo actually doesn't have any specific gender, but so Snoo represents our community. And it was, I think, a really special sort of symbolic moment for us, for Reddit, to have that, and to have that be the way in which we enter the public markets with our community, and as sort of a very much community platform that we are.
Yeah, I mean, the visual of the mascot definitely is way more interesting than a bunch of people in suits. So, kudos for pulling that off. But I want to dig into a little bit, the fact that Reddit was a very high profile, highly publicized IPO. It's a very visible company. It's not some pharma company that's making life-saving drugs, but no one's heard of them. It's very much in front of people's screens every day. So, and also in the financial media a lot. So how did you successfully manage the public spotlight and the messaging around your IPO with that much of the public and the media attention on the company?
Yeah, no, that's a good question. And in some ways, I think that helped us actually, because Reddit has been, as you said, sort of in the public eye and in the public spotlight long before we were actually a public company. And so we sort of we had to be mindful, of course, about public perception, and we needed to work with our advisors on kind of what the narrative would be, both from the investor perspective and then also from the press and the media perspective. And a lot of different things, a lot of Reddit's moves and changes that we made to the platform get picked up by tech press and the media, and in part because Reddit is really built by Redditors in a lot of ways, and our users and our communities are very passionate about our platform. And so some things that we, I think, had to do was one, be very careful and specific about how we're crafting the messaging, particularly as to what the IPO means for our community. And in fact, in our S1, we had one of the first few pages of our S1, we had a page that outlines what the IPO means for our community. And we were very deliberate and as transparent as we possibly could be with our users about the IPO process. And of course, things like we did involving them to buy shares or allowing them to buy shares in the IPO was part of this, and being as transparent with sort of our timing was also a big piece of this. And I think, of course, folks on the phone here from Brunswick, like Ash, really helped us kind of craft some of the positioning, and our other advisors as well on this call were pretty instrumental in helping us think through kind of what we can and can't do with respect to the public, and particularly the retail and our community in this process.
Ash, let's dig into this idea that there's so many stakeholders involved in the process, from investors to legal to the media to the general public and employees. Can you talk about what changed and why it's important for founders to keep in mind the different stakeholders in the process?
Yeah, so I mean, it's interesting. Just stepping back a little bit, I actually went back and looked at the risk factors in IPO prospectuses, S1 documents from sort of Amazon onwards, and in 1997. And bear in mind, these were smaller companies at this stage. There are actually 24 risk factors in the Amazon prospectus. It's 84 pages. Google had 32, 165 pages. Facebook had 45, 220 pages. Reddit had 75 risk factors and 291 pages. So I think that gives you a sense of just how much more complicated the world has become. And not saying that lawyers have become more sophisticated. Lawyers have always been very sophisticated, Rick. But it's just the complexity within the world writ large. And I also think these companies have become so much more high profile as well, and the stakes have become higher. So I don't think there was a sort of specific turning point per se, but I do think that IPOs, I mean, I've been doing this over 20 years, and IPOs have always gotten a disproportionate amount of media attention. And in this day and age, I think they've also become very good moving targets for lots of other stakeholder groups. I think the Uber one is a great example. As they were running into the roadshow, there was a whole load of strikes which had a material impact on their business and that had a potential impact on the deal itself. So I think that there's the pressure, the fact that you're revealing the company to the public for the very first time with a very, very revealing and detailed document with the S1, it gives a lot of other stakeholders an opportunity to throw darts at you and frankly scrutinize the company in a way that you haven't been able to do before. So I would say definitely the big internet companies, the profile of them, and then just the fact that the world has become more global, more complex, and then the access to information is obviously much more commoditized these days. But no, I think that Reddit did an amazing job at telling the story, just sort of building on what Jesse was saying. It did a phenomenal job at getting out early and telling the story, and then ultimately simplifying it as well, because you're pretty hamstrung by what you can and can't say once you go into what's called a quiet period. So you can't actually talk to the press then. So actually doing that prep work up front is really important.
Awesome. And so now I want us to bring the conversation, in the context of the present moment in the IPO market. And, Lizzie, depending on what newspaper you pick up or, what stat you cite, there are people who say there's softness, and you cited some numbers earlier showing that the market's actually more robust on a year-over-year basis. But we have seen some companies postpone their listings. We hear chatter that things like the election and market volatility are giving some companies cold feet. So, from your perch at Goldman Sachs, how open is the IPO market really?
It actually has been a question that I think I've been fielding now really since the market started to show some instability in Q4 of 2021. So in 2022, it was a very challenged IPO market. In 23, a recovering market. And in 24, I'm not going to raise my hand and say we're at an all clear from a perspective of the market being fully open. But there are many market signals that basically point to a recovering IPO market. I think taking a step back, listening to all of the speakers and how we're framing this conversation, I go back to the very beginning, which is really sitting down with the stakeholders of the company, of the board, of the employees of the company. What is the real purpose of going public? Is it to create permanent capital, to be more strategic? Is it because there are existing shareholders are looking for liquidity? Is it a combination of it all? Is it the point in time of the company where it's mature and the timing from the market perspective is conducive? So there's a lot of inputs that really drive IPO issuance and IPO volumes, not only here domestically within the Americas, but also internationally. And so I think it's really, really important, and Jesse honed in on this, and Ash honed in on this, and Rick said this also, but it's really about aligning the incentives, right, of the stakeholders to proceed forward. Now, is every company created equal? Right, in the eyes of an IPO investor? Probably not. In the current market environment, because we do have an upcoming election season, because we have very important economic global data that comes out on a weekly basis that influences risk appetite from the investor community and also the retail community, not only institutional investors, it really is about being prepared to go public through your IPO readiness and then going to market when it is stable, right? And so that you are really capturing the mind share of the investors and really looking for investors in their current portfolio construct to change from being insular in nature on how they're managing their risk and actually broadening the aperture of how they want to deploy. So think about an IPO. IPOs are incredibly emotional. Right? They're emotional for founders. They're emotional for employees. They're emotional for example, sponsors or venture capitalists. They're emotional for investors. When you're an investor and you own 50 different stocks and you have a lot of public companies that you can go and reinvest in, why, right, would you want to pick an IPO? Right? There hasn't been a lot of earnings, there hasn't been a track record. And so it really is a partnership between the management company and the investor in terms of the forward of building together and really kind of creating shareholder return together in a partnership format. So I look at these statistics and I quoted, for example, that global IPO issuance year over year is up 60%. In US listed IPO issuance, it's up 150% year over year. But if you look at the numbers, for example, versus 2019, right, in a more, quote, normalized market, pre-20, pre-21, we're running at basically 50% of that volume. So that's an indicator that we're not in like inning 9 of 9, but we're definitely in the right trajectory in terms of having a fully open market. I think there are certain sectors that perform better in today's IPO market than probably what one would expect. So if you look at, for example, large diversified companies that have strong top line, strong margins in terms of their EBITDA, great free cash flow generation, low leverage, those are the companies that investors are certainly seeking. And for some of the non-profitable tech-oriented businesses, that market will recover. I feel very confident about that. The question is how, when will that happen and how fast will that happen? And that's going to be more correlated with the macro environment. And so, yes, I think that we're in the middle stages. We're not in the early stages, and we're certainly not in all clear. But I do think, and I continue to be very encouraged, that if you're a company like Reddit, right, how Jesse has set up the company for success with his team, that you can certainly, tell the narrative and the story that you want. You can be thoughtful about how do you pull in your community, right, and build a forward partnership as a public company, that you can be unique in terms of how do you engage in those investors. And so while albeit the IPO issuance isn't as high as it was in 19 or 20 or 21, it certainly is an open market. And the question is all of the objectives, right, of you as a management team, you as a board, does it really align with a lot of the macro that we all can't control and a lot of the focus from the investor community? And so I do find it to be a very exciting part of the market, and it's a good setup, quite frankly, for 2025. We'll certainly have to navigate the election season in the US, and Q4 is always a unique time in the equity capital markets, but it does basically set up a very good pipeline and a good forward for 2025 if we have macro stability. So, hats off to Jesse and the team, because I think they had a terrific timing, and I do agree that even though they may have wanted to go public earlier, the valuation that they achieved and quite frankly the institutional and retail investors that they engaged with is really a testament to all the prep work that they did, which is the most important takeaway, which is IPO readiness is the only thing to be focusing on, because you can't control the markets, but you can control how you prepare for them.
Now, I want us to dig further into one key stakeholder, and that's employees. IPOs are very technical, but they're also very personal and emotional because they're an opportunity to reward the most loyal employees. Kristen, can you talk about how founders should be thinking about compensation structures and other tips to ensure that they don't lose their most valuable employees?
Yeah. So Lizzie and Jesse touched on some of these, but I think first of all, business fundamentals. I mean, they have always mattered. They will always matter, but arguably they matter more right now than in other times. So I think just focusing on having the strongest company you can is never a bad idea, no matter what stage you're at, but especially in that IPO readiness. As Jesse talked about, so many companies are thinking about their employees, those individuals who've worked so hard to build an amazing company, to get the company to that juncture, and to work towards that liquidity event that potentially will change the lives of their family or give their family stability, financial stability that they've been looking for. So that's a big piece also. And that's an area where Fidelity loves to play. We really work hard to advise our pre-IPO clients on how to think about this. And as you alluded to, education is a really big part of that. So often employees who have never gone through an IPO before, they don't even know what they don't know. And so that employee education piece is paramount to making sure that you are able to retain your great talent post-IPO. The final piece I will touch on, and I think everybody on this webinar touched on this, alluded to it, is the importance of having great partners. So really it takes a village to help an IPO go successfully, and you have to have the right partners in your corner. We certainly seek to be that type of partner in so many different regards, some of which we already talked about, but from the capital market side, we love working with Goldman and Lizzie's team and folks like Lizzie to make sure that IPOs go well via our retail channels. So, having the right partner who can create demand via retail channels, buyers, investors who end up actually not even selling when lockup periods end, but buying more, as our retail investors tend to do, can really just help ensure that things go smoothly. So I'd say, yes, it really comes down to business fundamentals, making sure all stakeholders understand, but especially your employee stakeholders understand what that IPO means to them. And then third, having the right partners who can help you see around corners and maximize your likelihood of success.
Jesse, how did Reddit ensure that the company culture stayed the same post IPO?
Yeah, no, it's interesting. I think it's a great question. And every company, of course, has different culture, has different norms and expectations, but happy to share about kind of the perspective from Reddit. So for the IPO, without question, was a special moment and a very important milestone for our company. It was always Steve's and the executive team's sort of vision to take this company public. They thought that really great companies are built in the public markets. That was our internal belief. And Reddit being sort of in a lot of ways built by Redditors, by our users and all the contributions that they make to the platform, it was important, I think, for Reddit to be a public company for that reason as well. So I think in terms of managing culture and expectations, while the IPO was an important day and moment, it's important for us to continue looking ahead and focus on the long term. And we sort of maintain that messaging to our employees through a lot of our internal conversations, through our all hands meetings, and through our quarterly business reviews. We just maintain the fact that priorities don't necessarily change, and strategies shouldn't change now that we're public. We set these. If we set these strategies and the company's vision and mission correctly at the onset, which we believe we have, they shouldn't change just because we're public. We're very much focused on now execution. We have the roadmaps in place, we have the leadership, and we have the team, the right people and functional groups built. Now we just need to focus on execution. And I think that's what's very exciting and frankly what we hope investors are seeing and appreciating as well. So boiling it down a little bit on kind of the first 2 quarters since we're public, what we've done to sort of carry this forward with the messaging to our employees, it of course takes good communication, and we can't necessarily be quite as transparent internally as we maybe were when we were private because of material non-public information, and a lot of the information sharing has to become a little bit more locked down. But we are as proactive as we can be. We do have our quarterly business review meetings very shortly after our earnings release. So we are sharing in as near real time with our employees the status of the business from a top-down perspective, all the financials, all the great progress the company's making. And we make it so that the folks see how their contributions are impacting the earnings process, how their contributions are impacting the trajectory of the business. And from an IR perspective, I think it's really important for my team and I to make sure that the functional teams and those that are building the product, that are out selling our products, selling our advertising solutions and things, see how the contributions that they're making are being spoken about and thought about from the investors and the analyst communities. And I think that sort of ties it all together. And I think that helps drive accountability. I think that helps to drive excitement and cohesiveness around the company's culture. And to think that, yes, we were all in this together to take the company public. It was very much a team effort, but our work is not done. And we still need to, there's a lot of execution we need to do. And there's expectations out there about how much we can grow and how big Reddit can get. And let's use that as the right motivating factors and the right incentives to drive our business forward is a little bit of the messaging that we're trying to convey internally and using this now in more of a public company setting.
Thank you, Jesse. And Rick, I want to bring you in now. Jesse spoke a bit about communication and some of the ways that has to be managed internally, because obviously as a public company, there are new regulations that Reddit and others have to adhere to. From your viewpoint as the lawyer in the room, what are some of the most common landmines that you see companies falling into, or some of the things that you things should be top of mind as companies go through the IPO journey. I can think, for example, of the quiet period, which is a time when mistakes can be made, for example. So, what are some of the just if you could come up with a list of some of the most recurring, um, call them landmines that you see companies falling into as they go on this journey?
Yeah, absolutely. And the quiet period has become almost kind of a mystical topic of discussion. And for private company management teams, it often is scary of, are we not going to be able to promote our business, speak to our customers? And the answer is you actually have a lot of flexibility to, especially speaking to your customers, speaking to employees, speaking to new products of the business. And one of the things lawyers ask a lot is, what have you done in the past? And so it's really important to work with Jesse and his team at your company, the IR team, the marketing team, to think about 12 to 24 months before IPO. What is our marketing muscle? And if it's not fully developed, should we develop it now? Because when you're in the quiet period in the middle of the IPO, one question people are going to ask when you say, we want to put out this press release, we want to do this interview, have you done it before? Is it consistent with past practice? When it is, a lot of times the lawyers will get very comfortable. And so, to your question about where are the landmines, if you stay away from discussions of the offering, of the IPO, of your valuation, of taking over the world, creating stockholder value, you really have a lot of flexibility to go out, even right up until the IPO. And the closer you get, the more sensitive the working group will be, not wanting to impact the IPO. But if you have a history of building that marketing and IR muscle, you will be able to continue to do most or all of that as long as you stay away from pumping the stock price or discussing the offering during the IPO. And I think that's really comforting to management teams to know we will not shut off marketing and IR just because you're in an IPO process. There will be more stakeholders involved. There will be a few sets of lawyers needing to review and making sure that you stay on the right side of the line. But I like to tell clients my answer is almost always yes when you ask, can we do this, as long as it's consistent with something we've done before.
Yep. I think it's great that you emphasize the flexibility that that companies and founders have, because that hopefully puts some minds at ease in terms of what can and can't be said. But we can't deny that effective communication is important, particularly in the way that fits a company's brand. So, for example, the way Reddit went about its IPO would be very different from a more buttoned up pharma company, or pick other industry that is just not as visible, and that won't send their mascot to the New York Stock Exchange to ring the bell. So, how do companies communicate effectively without sharing too much and without running afoul of regulators, and really customizing that to their particular brand?
Yeah, it's a great question. And so the pharma company that's going public, they may tell lawyers, we don't need any flexibility with the press because, unless it's around a drug release, we're not going to put out a lot of PR. Had that been the discussion with Reddit, that wouldn't have been okay. Reddit, Jesse was talking about this, is in the public eye, is going to get written about. And I think one of the hardest things is when you're in the quiet period, especially as you get close to the public filing, the roadshow, and the pricing, everybody talks about the high profile deals, right? The Reddits, the Snaps, the Ubers, those types of deals. And you as a company will really be able to speak through your S1. And so while there is a lot of flexibility, you do have to be prepared the closer you get to the IPO that people will say things that it will be hard for you to refute. And so one of the things I thought Jesse and the team at Reddit did amazingly well, and Jesse alluded to it, was putting in the S1, why are we doing this IPO? What is it going to mean for our community, for our users? And so the S1 actually was able to speak when there were a lot of articles written. And so I do think the preparedness ahead of time to think about what's going to happen when we're out on the road that we may want to respond to but won't be able to, and speaking to it proactively in the S1, I think it's a terrific strategy.
And lastly, to Ash, it's well known that fewer companies are going public. What's your fat pitch to a company that ticks all the boxes but is still hesitant?
So look, if they've been through the readiness process and they're feeling good about where they are, I think it's going to come down to a conversation with the other advisors around valuation and what the trade-offs are with going public at a certain time. But I don't want to overstep. And Lizzie's an absolute pro at this. She's the best person to comment on valuation. But I think once you go down the readiness track, you feel good about it, you've thought about all the stakeholders, you've simplified the story, got it in the right place. I think it really comes down to a case of what timing works for the company. But I think there are always going to be trade-offs of valuation, and in this market, as Jesse said, some of the greatest companies in the world have been built in public markets, from Nvidia, Google, Amazon, Meta. The list goes on and on. So I think getting public is never a bad thing. I remember Keith Rabois saying once, "It's never too early to go public," but I think there's probably a middle ground somewhere. But getting into the public markets and getting on with it can just often be the best way to build a great company.
I also would just add to that statement, if you don't mind, is I think one of the big shift changes in the past decade is just the pure amount of capital that's available for equity capital markets or debt capital markets. And so where we spend a lot of our time with investors at our firm is really understanding, is X institutional investor investing privately in private opportunities and in public opportunities? How do you think about the portfolio or the duration of that portfolio? And so to Ash's point, maybe for an IPO candidate, the market isn't perfect, but maybe they want to continue to build a private shareholder base. And so there's more investors that company can engage with to raise incremental capital in order to provide themselves an additional time period before going public. And so what I find to be really unique is that there's just a lot more capital that is sustaining broad-based financing, capital markets, debt and equity, that it gives a lot more flexibility to issuers. I agree, broadly speaking, with Ash. Yes, the more public companies, the better. It's wonderful in terms of creating new companies, new opportunities, and really watching management teams thrive. But once again, I think there's a little of a very different dynamic in terms of the amount of money that's purely out in the market in order to deploy to the product.
And so it sounds like the message to founders that want to take their companies public is the market is open, capital is available, but don't jump the gun. Understand the unique needs of every stakeholder and of every partner in the process, and make sure that they're catered to in a bespoke way. From across the panel, we've heard that patience really is a virtue, but at the same time, make sure that you're getting the best advice even from outside your own C-suite, so that you're open to tough feedback and analysis. I want to thank you all for your investment in today's panel. Jesse, Kristen, Ash, Lizzie, and Rick, you've made this lunchtime hour more fulfilling than any meal we could have had, and we're much smarter for having been here. Thanks again to Fidelity for producing this event with us. Thank you to viewers for spending time with us today. Take care.